guys, your Friendtor Gopika is here, and in this video we'll be discussing the first half of the practice set 4.2, which is from the chapter Financial Planning. Okay, so before we proceed with the practice set, please go through the videos or the previous videos of this chapter so that you get better understanding of how the examples are solved and which formulas are used. Okay, so in practice set 4.2, basically we will be solving the examples on GST in trading chain, okay, in various steps of trading chain. To know about concept, do watch the previous video, the link to which I'll provide in the description box. So without wasting time, let's get started. Okay, so this is the first example in the exercise. First, I'll choose a pointer. Okay. So, Chetna store paid total GST of rupees 1,05,000 at the time of purchase and collected GST of 1,22,500 at the time of sale during 1st of July 2017 to 31st July 2017. Now find the GST payable by Chetna stores. Okay, so here paid total GST of 1,05,000 and collected total GST of 1,22,500. So paid GST, collected GST. So now clearly you might know which one is the input tax and which one is the output tax for Chetna store. So first thing, mention the name of the firm, and then input tax means tax paid during purchase. So here the tax paid during purchase is 1,05,000. So your input tax should be 1,05,000. Okay. Next comes the tax collected, that is output tax, tax collected during sale, and that will be equal to 1,22,500. Okay. So now we just need to find what is the GST payable. GST payable means the amount which Chetna stores will be paying to the government. So while purchasing the product, Chetna store is paying 1,05,000 as tax, and while the sale of the product, Chetna store collected 1,22,500 as tax. Now the difference between the output tax and input tax, only that amount Chetna store has to pay to the government. Okay, this 1,05,000 which they already paid while purchase, that they can take or redeem from this amount, and only the rest extra amount will go to the government, and that extra amount is GST payable. In detail this concept is explained in the previous video, so please go through that. So GST payable is equal to output tax minus input tax credit, and that is equal to 1,22,500 minus 1,05,000, that will be 22,000 rupees. Okay, so this much amount, that is rupees 22,000, will be paid, will be the GST payable by stores. Okay, so very simple example wherein we are just using the basic formula of GST payable. So this is the second question in the exercise. Nazma is a proprietor of a firm registered under GST. She has paid GST of rupees 12,500 on purchase. So this is GST on purchase. GST on purchase means it is input tax. And next, collected rupees 14,750 on sale. So collected tax means output tax. Purchase, paid tax is input tax and collected tax is output tax. Now what is the amount of input tax credit to be claimed? ITC means input tax credit to be claimed. And what is the amount of GST payable? So first thing, Nazma. Next, input tax, that means tax paid during purchase, is rupees 12,500. Next, output tax, tax collected during sale, is 14,750. So GST payable will be output tax minus input tax, that is difference between 14,750 minus 12,500. So that would be 2,250, that is 2,250 rupees. Okay, So this is the GST payable, and ITC to be claimed. ITC is same as the input tax credit or input tax, one and the same thing. So that is 12,500, and GST payable is 2,250. Again, one more very simple example. Let's move on to the next question. Okay. Amir Enterprise purchased chocolate sauce bottles and paid GST of rupees 3,800. He sold those bottles to Akbari Bros and collected GST of rupees 4,100. Mayank Food Corner purchased these bottles from Akbari Bros and paid GST of 4,500. Now find the amount of GST payable at every stage of trading, and hence find payable central GST and state GST. So first we need to find the GST payable at the two stages of transaction or trade, and then we need to find central GST and state GST also. So once you find the payable GST, the half of it will be central GST and half of it will be state GST. So that is as in the same logic or the basic GST rules that we learned in the beginning itself. In the first exercise itself, you have solved many examples wherein we were using this concept that the total GSTs, half goes to the central government and half goes to the state government. The part that goes to the central government, we call it as central GST, and the part that goes to the state government, we call it as state GST. So that rule applies here also in trading chain 2. However, first we need to find the GST payable using the output tax and input tax difference. Now here they are not talking about just one transaction, there are two transactions happening. First transaction is between the Amir Enterprise and the Akbari Bros, and the next is between Akbari Bros and Mayank Food Corner. Okay, so first we will discuss about the invoice of Amir Enterprise. Now Amir Enterprise purchased the chocolate sauce bottles and paid GST of 3,800. Paid GST means that is input tax for Amir Enterprise. So input tax, that is tax paid during purchase, is 3,800. Then Amir Enterprise sold those bottles to Akbari Bros and they collected the tax. So the collected tax or the output tax for Amir Enterprise is rupees 4,100. Next, that's okay. Now with this, since we got these two things, now we can find the GST payable by Amir Enterprise. Applying the formula, GST payable is equal to output tax minus input tax or input tax credit, and that will be rupees 4,100 minus 3,800, which is rupees 300. So GST payable by Amir Enterprises is rupees 300. Now GST payable is 300, then central GST and state GST will be 150 each, because half will go to central government and half goes to state government. Next, okay, we talked about the first transaction which happened between Amir Enterprise and Akbari Bros. Next, Akbari Bros is having a transaction with Mayank Food Corner. So that part we will discuss now. For Akbari Bro, the input tax, that is the tax paid during purchase by Akbari Bro, is 4,100. Now if you notice, the output tax for Amir Enterprise is same as the input tax for Akbari Bros, because the person selling is Amir Enterprise and the person purchasing is Akbari Bros. So there his Amir's output tax should match with Akbari's input tax. Next, output tax, that is tax collected during sale. Now Akbari Bros sold those bottles to Mayank Food Corner. So while sale, Mayank Food Corner is paying a tax of 4,500. So output tax of Akbari Bro is rupees 1,500. So GST payable will be output tax minus input tax credit, that is 4,500 minus 4,100. So that would be rupees 400. So in the second transaction, the payable GST is rupees 400, wherein half of it is central GST and half of it is state GST. So both that values also we have to write, because they have asked us to find both. So payable central GST is equal to payable state GST is equal to rupees 200 each. So that's all with the third question. The question is simple. Only thing is that we have to consider the two different transactions that is happening, and we should be able to make out which is input tax and which is output tax for the firm we are talking about. That's it. So if you read the question carefully and if you understand what is input tax and output tax, then the problem is really simple, where we are using again the basic formula that GST payable is equal to output tax minus input tax credit. Okay, so this is the fourth example in the exercise or in the practice set 4.2. Malik Gas Agency, which is in Chandigarh Union Territory, purchased some gas cylinders for industrial use for rupees 24,500 and sold them to the local customers for rupees 26,500. Now find the GST to be paid at the rate of 5% and hence the central GST and UT GST. UT GST means Union Territory GST. Now since Chandigarh is a Union Territory and this particular firm is registered under that Union Territory, there you have Union Territory GST instead of state GST. Okay, wherein if the firms are registered under a state, then they have to pay the state GST. If they are registered under the Union Territory, then they will have to pay the Union Territory GST. So the naming is just because of the place where the proprietary the firm is registered to be paid for this transfer. So for Union Territories there is UT GST instead of SGST. Okay, first thing, so this is the name of the firm, Malik Gas Agency. Cost price of the cylinders is rupees 24,500. Okay, now the rate of GST is 5%. So rate of GST is 5%. That means input tax paid during purchase will be 5% of 24,500. That is 5 by 100 into 2450, and that will be rupees 1225. That is 1,225 rupees. Okay. Next comes the output tax. So for that we will need the selling price. Now selling price of the cylinders were rupees 26,500. Next comes the rate of GST, which is same 5%. And next comes the output tax, that is tax collected while sale, will be 5% of 26,500, and that is rupees 1,325. So you have the output tax, you have the input tax. Now to find the payable GST, we just need to find the difference. That will be output tax minus input tax credit is 1,325 minus 1,225 rupees 100. So payable GST is rupees 100. Now from this 100 rupees, half will be central GST and half will be UT GST or Union Territory GST. So that is rupees 50 each. So that's all with the video. I have completed the first 4 questions from the practice at 4.2 in this video. In the next video, I'll be discussing the rest problems. If you have any doubts, please write in the comment section, and you can also follow us on Instagram and post your queries. We will respond as soon as possible.